All right, I think we've still got a few people joining, but I think there's a lot to talk about, so let's get started. I'm Zach Fry, the program manager at BWC, and I want to welcome everyone to this episode of the BWC Dialogue Series. It is very timely, given the COP29 dialogues that are continuing in Baku right now, to be talking to the co-leads of BWC's Climate and Energy Transition Finance team about closing the climate finance gap today. The team just brought out their second report, Mobilizing Private Sector Finance for Climate Action and Energy Transition, which is available to read on the BWC website, and which we will hear some of the key ideas from today. Before I introduce all three of our esteemed speakers, one quick bit of housekeeping. We will have time for questions at the end of the conversation. And so I would ask that you use the Q&A function at the bottom of your screen to write in your question during the conversation so we can take as many as possible at the end. With that, I would like to introduce Afsaneh Beschloss, the founder and CEO of Rock Creek, Creon Butler, director of the Global Economy and Finance program at Chatham House, and our moderator, BWC Vice Chair John Lipsky. John, over to you.
Well, thank you. Thanks very much. Thanks for joining us. And thanks to Afsaneh and Creon for taking time to share their views on where we stand with regard to climate and climate finance issues, which of course have been on front page news. Well, most days it ought to be front page news, but it really has been front page news the last few days with COP29, with really the APEC summit in Peru, now the COP29 and the G20 summit, all virtually at the same time. But I'd like to start off by asking Afsaneh and Creon about the reactions to the announcements coming out of the COP29. It's hard for a non-specialist to really judge from all the talk whether it should be viewed as a success, whether it's insignificant or even a setback to progress with regard to climate change and climate finance. Has there been so far any single notable achievement of the COP29? So, Afsaneh, Creon, over to you.
I don't know, Creon, did you want me to go first?
Yeah, please do.
I think, John, first of all, thank you so much for talking to us, and very excited to be talking about the topic, particularly today. We also had an election in the US, obviously, which is very much impacting the subject and is a little bit of the elephant in the room. But I was going to say, sadly, when I read the news or I talk to people who are in Baku right now and have been there, the news is not as positive as we would all have liked them to be. There's always good steps being taken. For example, we have heard about the carbon markets, and I will talk about that in a little bit. But broadly speaking, there's not even agreements so far, at least, unless I've missed something this morning, about the role of oil and gas in the future. If anything, as we speak here today, for example, the US, which is very much part of the COP process today, is producing the largest amount of oil and gas, including from fracking, than it has ever does. There is more coal being used in China, in Europe, in the US, than we would have liked based on previous meetings. So I think what is happening is the reality of the situation, which is there's huge energy needs. If you're sitting in a developing country, you need huge energy to be able to grow. If you're sitting in the US or other parts of the G7, what is happening is the huge demand that is going on for AI needs, and we can talk about that separately. But people are backtracking on some of the agreements, or if they're not outright backtracking on earlier agreements, the language so far is not very positive or optimistic in terms of the things we were hoping. And the only other thing I was going to say, John, you alluded to the G20 meeting. There was also a biodiversity meeting that just happened separately. And it seems like there are more and more meetings on the climate subject and less actual action and actual dollars. Now, having said that, there's plenty of dollars going because all our day lives are getting affected by climate. So even if in the US, the C word is not a good word, everybody's getting impacted, whether you're sitting in Spain or in the US or in Bangladesh or in any island economy. So everybody is living with the impact of climate issues. It's just that world leaders do not seem to be able to come up with a very simple language on what we can do and what we can't do.
Well, I agree with what Afsaneh has said, and I think I mean, I was talking to some journalists earlier, and I think it's possible that we may have the negotiations continue through to the weekend. Even possible there may not be a concrete outcome. I think part of the problem is, I mean, this specific negotiation is focusing on public international finance and how much is provided to low income and emerging economies, and also how much of that is closely related to leveraged private finance. We have had the MDBs, for example, announcing that they plan to increase their provision of public international finance to 120 billion a year by 2030, which is, by my calculation, up from 74 billion in the most recent year. So that's between 10 and 15% a year, which is in line with kind of what has been happening, but it's not the sort of radical step change that some have been calling for. Similarly, there, as I understand it, there's a lot of debate about how much other sources of public international finance may be committed. And I think, what we're seeing is the real constraints on advanced countries, who are the overwhelming providers of overseas development assistance. Notwithstanding the really strong moral and practical arguments for more public international finance in this space, there is a limit to how much they can do. And I mean, we'll get into the discussion. There is, I think, therefore, not going to be, if you like, $1 trillion committed to, which is what the estimates are of how much you need to close the gap in low income and emerging economies, excluding China. It's just not going to happen as far as I can see. And the question therefore is, what is a realistic space? And then you have the added problem that at the moment you have President Biden, the US administration, involved in this, and they are generally positive about the need for more public international finance. But next year we will have President Trump, and he is likely to have a very different view, not just on the international aid and overseas development assistance, but possibly even on what the MDBs should be doing, and that will be that poses additional challenges.
Okay, and let me follow up on that your 120 billion commitment by the MDBs by 2030. In your view, as you noted, this is well short of what was hoped for and anticipated and deemed by environment experts as necessary. But how should we view the 120? Is that reasonably about as much as could be expected, or does this represent a lack of real effort on the part of these institutions?
Well, I think I haven't looked at the precise details through which they come to that, but I think in a way this is the MDBs doing the maximum they can with their existing capital, maybe by sweating the balance sheet a bit more, by potentially using funds that might have been used in other purposes in this space. So they're doing as much as they can within the existing constraints. That's how I read what's happening. I mean, if you were to make a step change in that, you would need substantially more capital in the MDBs, or, as we propose in our project, another way of deploying public international finance so that you're able to leverage an awful lot more private finance. And we may get into the discussion of exactly how we might do that.
Yeah, I think later on we'll come back to the proposals. But basically what you're saying is, without new commitments by the shareholders, there's really not much more you can expect out of these institutions. Well, then, what?
John,
sorry, Afsaneh, go ahead.
Because you've been very involved yourself, John, in a lot of these negotiations now and in the past. Just in the last few days at the G20, there was a lot of conversation about how much money, for example, would go into either replenishments. And the numbers look good, but they are not maybe as exciting as we would have even liked them to be, but certainly, a positive. I think there's a lot of pressure on a lot of governments to provide resources for a number of things. Climate is one of them. There's so much, if there is a situation in Ukraine where you have to start reconstruction, that will be like a huge demand on many of the same institutions. At the same time as we're speaking, there is, huge amounts of money still going into coal power plants, or, very little is getting done on refurbishing coal to move to natural gas or to cleaner fuels. So the demands, as Creon said, and as you alluded to, are enormous. This 120 is very small. I think the big issue is, will this even 120 happen, right? Because one is multilaterals themselves have a lot of priorities, and each of them has to meet those priorities, and climate is one of them. And number two is that the slowness of money getting pushed out of MDBs is still a fact, and whether they will be able to move as fast as necessary. And third, like Creon said, you also need to leverage some of those monies with other monies. So anyways, we look forward to talking more about those.
Yes. So in essence, the current situation is somewhat ambiguous.
Yes.
I guess it depends what happens and what happens in the future. Is there any particular step that we can look to in the coming year that would, just in the next year, a practical step that would give some indication about kind of a litmus test on ambition, or is it still going to remain pretty murky? Or do you have some signpost or favorite that you could point out to us?
So I think one of the things that is, if you like, realistic within the framework of what advanced countries are able to provide now, but could make a really significant difference, is if we move to a situation where the overseas development assistance that's provided, which ultimately is the source of more capital and so on, is subject to more risk. So essentially that the advanced countries are providing funds and that they are willing to expose that to greater risk, and that through that route, you leverage more private finance. So, that would be, for me, so within the overall envelope of what the advanced countries can do and the overseas development assistance they provide, that a proportion of that assistance is then deployed in a way that it bears more risk, not a ridiculous amount of risk, but more risk than is currently the case. And we may talk about how that might be done. But for me, that would be both a realistic, but also a could lead to quite a significant change in the overall volumes of finance, both public and private, or particularly private, that go to address these questions particularly in fast-growing emerging economies.
Very interesting. Afsaneh, do you concur or have some other litmus test?
I think I concur with Creon. The other litmus test, John, that we don't generally talk about in these conversations, but we have also tackled a little bit in our two papers, is maybe, while we're doing this top-down allocation, it's also good to do a bottoms-up allocation, in the sense that, what are really big priorities. So I'm just sort of going to one place where everybody has studied it to death, which is, let's go to Indonesia coal power plants, right? One, how do we make sure so that we start doing bottoms up needs, right? On some basics. It doesn't mean that has priority to doing some other kinds of investments, but simply define what you need to get coal out of the equation, right? And for new plants, to start with clean energy sitting in a lot of the countries that are doing this, so that while you're doing the top down, you're doing the bottoms up, and not get stopped, because we all know how slow the process has been. Even monies that were allocated for this very specific purpose did not move, right? For a variety of things. So if we could be problem solvers, because it's not enough to just assign a number, whether it is 200 or 1 trillion. Also, what will get done realistically, right? In the year, in the next 6 months, in the next year, in the next 5 years, in the next 10 years. and do that bottoms up. So I think that will also be very helpful, and then maybe it will push the envelope.
Oh, very, very interesting. So we have two things to watch for. Now let's turn to your report, your group's report. It offers a framework of how the MDBs can make the most of the monies that they receive, and they have you've offered a push-pull framework that's both pedagogical and true. Could you walk us through the main ideas of this framework, how we can look at this?
I'll let Creon start.
Okay, I'll go with just have a sort of brief overview. I mean, I think the first thing is when looking at how you get more private finance into climate action, the first kind of key question is, there are two ways, if you like, the MDBs can deploy their capabilities. I mean, one is actually the very traditional way, what MDBs have long since done, which is improve the business environment, whether it's through lending to improve policy or lending to deal with critical infrastructure bottlenecks or to improve capabilities. I mean, this all creates an environment in which is more attractive to private investment. And although it's very hard to measure exactly what the multiples are, they are potentially very large multiples. And then alongside that, you have what has been a big focus in recent times. It's where the MDBs co-finance with the private sector. Now, the private sector is the private sector. It's not, it's going to want the same kinds of returns, the same profitability. It's going to want to have as little risk as possible for the maximum return. So in a way, you have to have your eyes completely open to that. That's what's happening. But you can put public capital alongside private capital. And, the public capital maybe, for example, accepts a lower return, or it may be it takes on some of the risk, which then it brings in the private sector. So these are kind of two ways of the MDBs using their capabilities to increase the flow of private finance. And I think, one of the things we're saying is, we should objectively look at which is the best value for money between the two. And at the moment, there's an enormous amount of figures are going around. Some people say they have a multiple of 6, some may have a multiple of 20. So really important for the community as a whole, public policy community, to know which is actually the most effective way of deploying public international finance in particular circumstances. And that's one of the recommendations, that we should actually double down on understanding that an awful lot better than we do now. I think the second proposal in this space is really around how, as I mentioned earlier, how you use public capital. At the moment, if you put public capital into an MDB, in a conventional sense, you might commit, let's say, 10 billion, and the MDB would use that in its traditional way. The problem with that is that, particularly if you're thinking about scaling it up, that the 10 billion you pay in is not, if you're a finance ministry, what you're ultimately on the hook for. You're potentially on the hook for 9 times more than that, for another 90 billion alongside the 10 billion you put in. And although at the moment, and this essentially means that it constrains the MDBs in how much risk they can take on. They have to sustain their AAA rating, because otherwise the shareholders would say, look, you're exposing me to too much risk. So the second proposal is to say, let's find a way through a new kind of financing window, deploy, operated by the MDBs, so using their expertise, but where you can actually expose that contribution of public capital to greater risk. And therefore, if you're thinking of a balance sheet on the asset side, they may be lending into BBB or single A projects. And the debt that they're raising from the private sector in order to do this would similarly be, not AAA, but BBB, single A, or whatever. And through that, you have a supply of finance, which then enables you to bring a lot of near bankable projects in fast-growing emerging markets into play in a way that they aren't currently. Now, that doesn't solve the whole climate finance gap, but it could make a significant difference. And that, just finally, there are examples. I mean, there's an institution called TCX, which actually is a quasi-governmental institution that ensures the dollar financing to low-income and emerging economies, so that they're actually able to use local currency finance instead of dollar finance. Now, overseas aid agencies have given money to TCX in a way as kind of expenditure, expecting that it might be lost and accepting that it might be lost, but nonetheless on the basis that this is a very good way of using a certain amount of public finance in order to increase the ability of low-income countries to have their financial obligations in local currency rather than hard currency. And I think the point I'm making is that one would want to do the same kind of thing, so that you're using some of the ODA in a way that it could actually be lost. In a way, I mean, probably would not be lost, but that it could be lost in a way that when you give new capital to the MDBs, you could not consider of it being lost. And I think that is the sort of second idea.
And I was going to just, I think Creon has already described it incredibly well, but I was just going to, on point 2, just mention, basically, there's been so much studied, and John, you know this better than really anybody else. You don't want to impair the capital of the MDBs, right? So how do you basically eat your cake and have it? So yes. The only way, and you don't want to create new institutions. We already know, that's not a good solution. So how do you do that? You want to not impair the existing credit rating, but you also want to create, as Creon used an example, I use another example, like IFFIM, where our friend Ken Lay is the chair, where you basically don't have to have the AAA rating, and you can create that structure that is a different rating and can borrow in the markets. And even though it's borrowing at a higher rate, it's still slightly higher rates. It's not the way that individual country would need to. And then, as Creon said, also provide swap facilities and other things so that the countries are not stuck with currency risk. That will be a big issue if the dollar continues to be strong and even get stronger compared to some EM currencies. You definitely don't want to be lending more and creating a bigger FX risk to a lot of countries. So I think on both of those kinds of things, it will be very important to think it through, and the World Bank can really move on this quite fast.
Mm-hmm. Well, I know that they've been, the World Bank and others have been looking at these issues. Have you had any contact with them? Not asking to betray any confidences, but is there, in general, interest in some of the MDBs along these lines, or even specifically along the two-window structures that you've described?
So I have discussed it with them. I can't say that they say, oh yeah, that's the solution to our problem. I think where they are now, and you will, being in Washington, you probably will be closer to this now, is they're looking at all the things within their traditional framework to try and do as much as they can, on the basis that if they've tried all those things, then they're in the strongest position to ask for more capital, but capital in a traditional way. Whereas what the paper we have here, what we're proposing is actually to have public capital used in a very different way. And I'm not sure, I haven't come across people in the MDBs yet who are saying, yes, we're ready to look at that. But, if in a world where the prospect of new traditional capital becomes even slimmer, perhaps in the future than it is now, with President Trump in place, perhaps this is something that would be looked at more actively than it has been up to now. I think some of the climate funds have looked more actively at this kind of approach. But again, it sort of runs against a very, conservative view as to if you put capital in, it should not be capital that can be lost, especially if it comes from the public sector. Whereas we're saying you should allow for the fact that under certain circumstances it could be lost, but that's okay.
Mm-hmm.
I think again, the loss, an individual bit of it may get lost, not the totality would still be, earning enough to be as a total sum, be economic and work out. But I think what Creon said is very true. I think until recently, most multilaterals, including those in Washington, have been saying, oh, we want to look at all the options. And I think, John, again, you know the dynamics. People don't want to say there is a potential pot if you're raising money for IBRD and, IDA right now. So you want to sort of deal with that sequentially. I think the dynamics obviously changed a lot in the last week. So what I'm hearing is more openness to this ideas, I would say in the last week than I had heard earlier, just because if there is not a lot of new, and I think there's been a lot of very clear messages going from the new president-elect and his group, and who's going to be in Treasury. That will be really important for this conversation, obviously. But so far, multilaterals don't seem to be the ones who will be gaining anything. If anything, the DFC will be gaining a lot more assets. I mean, everything I've heard in the last week is that the DFC in the US will be getting more and will have the ability, particularly in the Asia Pacific, to do more things strategically, and that the Trump administration is seeing that as a big priority. Multilaterals, is not clear what the new resources will be. So I think there will be a lot more attention once that is determined in terms of, flows into the next capital raise for the bank, let's say, or others, to then put more urgency into this. And last but not least, I think we've talked about this before, John. I mean, my sense has always been multilaterals do not have the sense of urgency that we need. And I think this is a good time for that sense of urgency to be in place.
John, if I could come back on the sort of final idea in the paper, which actually Afsaneh has referred to already, which is, I mean, what we've talked about up to now is how do you pull more private finance to climate action? There is a sort of parallel question that, I mean, although we are now in a situation where I think, according to the IEA estimate, if you're looking at the investment in the energy infrastructure, we're in a situation where 2 trillion per year is essentially green and 1 trillion a year is brown. So that's an awful lot better than it was some years back. But there is a still question of why is 1 trillion a year still going into brown investments? And we talk about this in the paper. Some of it may actually be this is the only way. This is essential because it's hard to abate sectors if it's not energy, or if you are looking at energy, it may be in areas where actually renewables just don't work, or where you need a sort of continuity of supply and so on. But even then, it's a real puzzle to me why 1 trillion a year is going into brown investment, particularly when you take account of the path of extreme weather events, the possible the speed of technological change, which can make many, as we've already seen, not just with renewables and wind, but also with EVs, can very quickly make equipment that depends on hydrocarbons uneconomic. So one of the issues actually is there a kind of moral hazard here? Are private sector firms still investing in hydrocarbons because they think, well, they're very short-term returns, and if it turns out bad, governments will step in and bail us out, as they did in a very major way during the pandemic, for entirely different reasons, but and also in the European case in following the Russia attack on Ukraine with the energy shock, there was also an element of bailing out. If that is the case, then that's in a very, that should be a relatively easy thing to address if governments are much clearer about the fact that in those circumstances, even if actually the change is brought about by changing government requirements, changing regulations, and so on, the private sector cannot expect necessarily to be bailed out in those circumstances. Now, you're very familiar with moral hazard in the financial sector, but it does seem to me that there's a kind of puzzle here that needs to be addressed. Sorry about this. This is my green my green office. But anyway, so I think that's a further factor we talk about in the paper.
Interesting. Afsaneh, do you want to add anything on that?
I think nothing. I think Creon has said all the really important points. I think there is another elephant in the room, John, which is nuclear power, because obviously nuclear has been not something that we've thought a lot about in particularly the developing world. However, there's a lot of effort right now, particularly in the US, to look at modular nuclear. There's a lot of new resources going into it. We all read, NL is going to be putting a lot of new resources, and NL's, I think, what is it? Their revenues are the 4% of Italy's GDP or something. So they kind of have a few dollars to spend. And is there a scenario? I think the big scenario should be if China could just stop selling, and others, by the way, stop selling coal power plants to these countries. Because if those plants are getting sold, going back to Creon's point, it's all incentives, right? So if I can get a coal power plant for free as part of aid, right, from one place, how about getting an alternative? If we can start stopping new ones completely and having them replaced, whether it is with renewable energy, solar and wind, but sometimes natural gas maybe that is better, and nuclear, I think it will be very helpful. And let's be very, very clear. I think one thing that changed John completely in the G7 world, as we all know, for example, the World Bank has not been allowed by Treasury and G7 governments to lend to anything related that includes hydrocarbons, even if it's reducing methane, right? Not allowed to. So methane emissions. That's a big problem when you yourself are doing all of those. If you're the biggest fracker, if you're the biggest user of hydrocarbons yourself, producer of hydrocarbons yourself, there is a problem. You can't be lecturing others. You are not allowed to do X and Y, but I can do that. So the conversation in the US as we speak on climate and on energy under this administration, before we go to the next administration, is that we need to use every source of energy in the US, every source of energy, right? Yeah. So we also have had this, we also are aware of this big climate problem. So our, Creon and what, he and I, together with this great working group, by the way, that we've had at BWC, have been talking about there is a real world out there. We have to live with that real world. But how do we, in that real world, move more resources into developing countries, but also understanding that if, maybe if we could move, again, I'm using just the case of Indonesia, but it's really across the board, for Indonesia to use natural gas as part of the menu, maybe some of this modular nuclear, as well as solar and wind, they also have all the choices. But you can't say you cannot use all those things and use them in your own country. So I think that conversation really happens behind closed doors, but not sort of in the general conversations.
Very interesting. Well, but let me ask in this following way. If what may be happening and maybe in the offing is a move towards more bilateral funding
Yes.
and less multilateral, is that likely to encourage more creativity or inhibit it?
I think it could go either way, right? I mean, it could go, that's really, I think you could have bilateral, if the Italians now want to go big in nuclear, and that's bilateral, and modular nuclear, that's one conversation. If somebody else wants to sell you coal power plant, that's another bilateral, right? Yes. So I think, both are bilateral, but, they can go different directions, but definitely you want to be innovative. The advantage of multilateral, to me, that's just so much more efficient because you're learning lessons in one place with one situation, and you can leverage that. You can bundle risks. So there's both the know-how sharing, but also the risk sharing. So it's definitely a more efficient way of doing it. And in the old days, it used to be, NL wanted to do something in developing countries, it would go through a World Bank or whatever. So I still think multilateral is the better way to go.
I agree very much with Afsaneh. On the other hand, in a world where the only way we can get, continuing increase in public international finance is through bilateral routes, we'll have to go that way. But I mean, one of the problems with bilateral is all kinds of other things, kinds of political conditionality, linking to trade, and all that kind of thing can become involved in a way that's not the case with multilateral lenders.
So no magic bullets. Now, let me change the focus just slightly. One of the announcements that come out of COP29 is an agreement to begin creating carbon credit quality standards, which could lead to a creation of at least a UN-backed global carbon market. And the creation of a carbon market is a key recommendation in a report that the Bretton Woods Committee Multilateral Reform Working Group proposed earlier this year. Now, your paper recommends an audit of why such high levels of private funding still flow to carbon-intensive finance as a first step toward carbon trading. So, as we were just discussing, but is this agreement on quality standards a good step? And what are the next steps to a credible carbon market?
Creon, did you want to go first?
No, I know you're much more expert on carbon markets than me. So.
No, I think there's been a lot of work on carbon markets, and there was a very big push, I would say, in the last year. And I think, John, if we can create carbon credit quality standards, I think that will be a great thing. Given all the things we just discussed, the practicality, but whether it will actually happen, I don't know now with the election, that we just had in the US. But I would say outside of the US, some of these markets are already, I think have more chance of working. What is interesting is if you go into any insurance company in the US or outside of the US, in Europe or Asia, they are looking at these because it's risks, right? I mean, they look at risks to their businesses, right? So they're looking at these risks. If you go into some of the sovereign funds in Asia, like a GIC or Temasek, they are incorporating carbon pricing into their investment decisions, unlike us here. The US, where really pension funds or big investors, allocators do not do that. The reason they do that is not because they believe in, doing good for the world. They're doing that as part of their risk assessment, right?
Yeah.
So
Yes.
I would say I think a global carbon market is really, really important. And I think it could be very powerful. There are a lot of, within the US, there are small startups that have started that let you also trade your carbon emissions against others. So there are all these entrepreneurial type businesses that are being created to do that. There's obviously a lot of work that has been done in this area. The question is UN the right, a UN, should the UN be backing this, or should it be something else? Because again, if you want to be practical, why not? I question whether it will happen with the UN, particularly given the way, again, we had the election last week in the US, and the strength of UN organizations may not be as much as we would like them to be.
Creon, do you want to add something?
I mean, I think it's really that we need more information to help the private sector, and to the extent that you're getting more parts of the private sector that really are interested in avoiding carbon risk for the reasons that Afsaneh said. This is not doing good. This is because having too much climate risk is really going to be bad for you in the longer term. So I think this is a step in that direction of improving the signals that the private sector, bits of the private sector that are interested in doing this. It goes back to my point about moral hazard, but let's say that's the bits of the private sector that want to get there, want to fund the things that have lowest climate risk. This is a way of helping achieve that.
Well, let me come at this in the following way, a bit provocative, perhaps. When we look, and you may have heard me talk about this before, the UN, for all its virtues and our admiration and support, is not an organization designed to be able to act in complex circumstances. The Secretary General does not. The operational decisions are taken at the Security Council. The Secretary General does not chair the Security Council, does not set the agenda. There's a rotating chair, and there are a whole bunch of folks who have veto power. So in difficult and conflictive circumstances, this is not an institution designed to act. In contrast, the Bretton Woods institutions, in fact, were designed to be action-oriented and effective organizations in which the executive chairs the executive board, the managing director, the president chair, the executive board sets the agenda, and decisions can be taken with a voting rule that allows majority voting. That means that you can reach conclusive decisions even in circumstances in which there is important opposition. Does this suggest that in an area which is likely to be difficult, should the Bretton Woods institutions be assigned more leadership role in dealing with climate? Since we've just come away with the discussion that this is COP29, if I'm not mistaken, which says they've had a pretty good long track record, and maybe we need to be on a different track. Is this plausible, or is this pie in the sky?
Maybe I have a go at this. I mean, the everything you say, I understand. On the other hand, you know, the UN does have a kind of legitimacy, and it can provide an overarching framework, which is really the IFIs, you know, just aren't able to do, because they're kind of structured in a very different way. Voting is linked to you know, the size of your economy, or not even that to some extent, but largely to the size of your economy in the way that is not the case for UN. So although I fully understand what you're saying, I think you still need an overarching UN framework for climate action. I would also say, you know, that notwithstanding the slowness, it's COP29 and so on, there is, you know, an awful lot has happened given where we are now compared with where we are, just not fast enough, but still an awful lot has happened. But within that overarching UN framework, I think you're right that you could certainly give more of a leading role to the IFIs, both the MDBs and the IMF, in sort of delivering what is needed and in implementing the overarching framework that is needed. And to some extent, I think that's already happening. I mean, the MDBs are kind of getting their act together in a number of ways. The IMF is far, far more focused on climate finance than it was, you know, 4 or 5 years ago. But you could give that a further impetus. I agree.
I don't disagree with what Creon said. I think it's, you know, UN can also always provide a broad framework, but at the same time, I still think that the multilaterals and the Bretton Woods, you know, institutions are a really good place to actually implement this. Again, if there was, you know, some people might say it's a better thing to produce, and you know, there's like in the US, there's a group called that is working on voluntary carbon sort of offsets and things like that, and that's actually working quite well under the able leadership of Annette Nazareth. But the interesting thing, I think, is if you want this to get done, these institutions exist. The IMF exists and has this as a priority. The World Bank exists, has this as a priority. If we can just get them to have that sense of urgency, I think it would be good to have them help in terms of the implementation.
In other words, these institutions potentially could help boost the ambition and will of the shareholders, rather than simply sitting back and waiting for orders, if you will. And this has been great, but Zach, it's time to let the audience see if they have some questions for our very expert guests.
Yes, absolutely. We have a few.
May I just say one thing? Because Creon and I very much appreciate it. We have an incredibly strong working group that we work with, and they provided a lot of inputs into the process. And just wanted to say that a lot of the work that came out, apart from the able work at Creon, it also is, you know, from this wonderful working group. So very grateful, and everybody at Bretton Woods.
Great.
We have a few questions already. The first one from Mark Hughes on climate taxonomies. There are some 30 to 40 countries that have developed climate taxonomies. Do you feel that these are helpful to unlocking transition finance, or are they impediments?
So I think ultimately having better information about what's green and what's not green must be a good thing. But I realize there is the way I would characterize it, a sort of spectrum, say, between the EU approach and, let's say, the Japanese approach. where, you know, part of the potential problem with a taxonomy which says this is green, this is not green, and you should only do stuff that's green, is that there are industries that need to transition, and the risk is they won't get any finance in order to enable the transition. So I think the general idea of having more information around what is green and what isn't green is a good thing, but we need to take account of that need for certain industrial sectors to have the finance to enable them to do the transition. And also there is a broader issue of how can you have, you know, one consistent taxonomy rather than multiple taxonomies as we do have now.
I agree with Creon in the sense that it's always good to have something to measure so that you can show progress. But having all these different taxonomies, to be honest, is very confusing. It's already hard enough to implement any one. So again, just the same conversations we just had with John about you know, who would be creating the new credit quality standards. The more you have one institution, is sort of like gap accounting or whatever that is creating this and is an internationally accepted institution or within an existing institution, I think it just makes it easier. The other thing, Zach, I was going to say is this is also being a little bit misused by people who do not want to invest in the green economy, because by saying we cannot measure to the last iota this particular investment or this particular area that we're working on, so let's not do it at all. And that, I find the damage from that right now is quite large.
Thank you very much. And then I have another question here from Ken Lay, going back to the conversation on nuclear energy. We could accelerate new nuclear technologies hugely. Why isn't it happening?
Afsaneh, you.
I was going to say, I mean, nuclear, and Ken knows this better than anybody else, but nuclear used to be, you know, very large plants, huge investments that took a very long time, right? And a few countries that have been doing it, and in many countries, after a number of accidents, new investments stopped, right? So what is interesting is literally in the last few months, how that dynamic has changed. We've all read about some of the largest, you know, some of the Magnificent Seven here who are working, whether it's the 3 Mile Island, you know, no one ever thought those, you know, those were all projects that were getting completely shut down. And those are being not just, they will be reopened. So I think that is a big change. A lot of energy companies, if you look in the US, there are some energy companies that use more nuclear power than others, like Constellation. Their stock prices are, you know, off the roof. It's huge. But what is very interesting is sort of what I mentioned earlier, which is this modular nuclear, which is the small nuclear. The technology is not really new. They're using it in submarines and other places, but adapting them and sort of making them a more of a widespread kind of thing, I think is very interesting. And as much as modular solar is great, but you know, with what if you don't have enough sun, you won't have a lot of power. With modular power, you will have the power. And they're trying to find ways to deal with the waste, which is much smaller than the waste for the big power plants. So I think with going back to Ken's point, one is that building them needs a lot of capital. And, you know, if you started to build a new big power nuclear power plant, it would take, I don't know, 10, 20 years, whatever. And so unless permitting rules changed, unless some of those things change, which is not impossible with some of the changes in government or in Europe, then you're not going to see big nuclear, but this modular could really change the world if it works.
I mean, just to say, I mean, modular is a big part of the UK government strategy, not least because in Rolls-Royce, there's a company that can actually do this. So it's the question whether you might see a revival of the UK nuclear industry through that route. I mean, 2 other things I just say, as Afsaneh said, nuclear is not cheap. It may be necessary because it's continuous supply of power, but it's certainly not cheap. And so there is a question of, can you get to that greater reliability through other means to some degree? You know, we've got the development of battery storage in relation to renewables, helps in some of those areas. I mean, there's energy efficiency, which is a fantastic way actually reducing the demand, and a lot cheaper probably than some of building new demand through nuclear. So I think I think those are some of the issues that governments are grappling with in trying to consider how much emphasis to put on nuclear versus other ways of dealing with their power challenge.
Interesting. And can I follow up and ask on the modular portion of nuclear energy, is the scalability element there the same that it would be kind of with the more classical large plants?
Yes.
Yeah.
I mean, a lot of potential. As we speak, like I think Amazon just invested here in one particular company that happens to, I think some founders and others are here in the DC area, the Maryland area, but they just put in like 600 that they're starting with 300 million, going to another 300 million. Dow Chemical is already using some of that technology. The others that Breakthrough Energy has invested in, Creon mentioned the UK, the Italians. So I think a lot of it's gone from like nothing over the last year to that is the conversation right now. And it's a conversation that I have only heard about in developed countries. I have not heard that conversation, maybe outside of China and a little bit, one or two other places, as a way to resolve some of the energy issues in emerging, where particularly island economies where modular, regardless of what the source is, has to be the solution versus big grids, which are, which come down every time you have a storm.
Interesting. Thank you very much. I have a few questions from Herman Mulder here, so I'm going to pick one out. Going back to local financial markets, we talked a little bit about TCX, but also I think this came through also in the group's first report. But can you both speak to the importance of developing local financial markets and what effects that can have in terms of kind of bridging the climate finance gap, and any recommendations that MDBs can any actions MDBs can take to help foster those?
So this, in the second report, we kind of deliberately didn't go down this route, but it wasn't because it wasn't important. It's just, we focused the report on other aspects. But I agree that this is an essential part of the solution. I think there is an issue about so I mean I think the challenge is it works in some countries, it doesn't work in all countries. So it doesn't work in the lowest income countries because even with tremendous effort to build infrastructure and so on, you're just not going to generate significant amounts of finance from that source. But certainly for the middle income countries, this is potentially very important. I think there's also a question around the tax base, raising more revenue, getting more local public finance alongside the financial market aspect, the private finance, which is important.
I was going to say, Zach, the bond market in emerging markets is in the trillions. The multilateral money given out to these countries is in the billions right now. So it's really nice to use those huge numbers that everyone wants to get every year, which is really like, it's almost like we live in a fairyland. How could you do a trillion? Just give me a trillion when, when the World Bank's actual balance sheet is in the hundreds of billions, right? So, and that's lending over a long time, a long period, for example, and that's just one multilateral. But if you add them up, it's not where you want to be. So I think this idea of using local markets, again with limitations that Creon mentioned, is extremely important. It already is happening, but that is one of the things that in our first report we did talk about really leveraging.
Thank you both. I think one final question here that kind of has been asked in a few different ways a couple of times is on the relevance of the regional MDBs moving forward. I mean, we're talking about kind of the need for some creativity and possibly also the need for some people to make first moves or some institutions to make first moves. And so I wanted to hear from you both kind of as we close here on what role the regional MDBs can play moving forward.
I mean, they have played really important roles. When we look at like EBRD, what they did, in Eastern Europe, now they're expanding, or Inter-American Development Bank, where you had with Mr. Moreno, when they created the private sector part of the Inter-American Development Bank, and have been doing so many really cool, innovative things. And Asian Development Bank obviously sits in a very, interesting, very vibrant part of the world. So I think they can be really, really powerful. And at least John remembers this from the old days. It's really working, the regional banks working with the multilaterals can be a very powerful, instead of competing with each other, I think that could be a very powerful recipe for success. I don't know, Creon, if you agree.
Yeah, I mean, as you say, the EBRD has, in particular, it's gone a long way relative to some of the others in terms of local currency finance, climate finance, and you have the AFDB, Inter-American Development Bank, looking at the potential deployment of SDRs to provide funding for climate action as an alternative to going through the RST in the IMF. So I think definitely there is this sort of the scope for innovation. In a way, what you need to get right is this sort of balance between coordinated action by the MDBs on certain things, but also without that constraining the scope for innovation and sort of trialing out and indeed, as Afsaneh says, to some extent, competition between them. So it's a kind of ecosystem, and you need to get that balance right between them. And in a way, it's the shareholders that stand behind them that need to create that environment, because one thing they tend to have for the most part is a common set of shareholders who can sort of set the framework for this activity.
Thank you very much. And we're just about at our time, and that's I think that wraps up our questions. So John, I'll hand it over to you for the last word in just a second, but wanted to say thank you to Creon and Afsaneh, not just for your time today in this great conversation, but for all of your work leading the climate and energy transition finance team at BWC.
Thank you.
Thanks, Zach. I couldn't put it any better. Only to say that obviously this is a topic that is of utmost importance. You feel as though among the public in general, the recognition that this is an issue that is a challenge that must be addressed is gaining. And yet the actions we continually feel as though the actions are lagging behind. So I think first of all, thank Afsaneh and Creon for participating today, for their leadership and the work that the Bretton Woods Committee's done in this area, for their, I think, interesting, innovative, and hopefully practically useful suggestions on a way forward. But also to signal that I hope, I'm quite confident this is not the last time that we will have a good reason to get together, review where things stand, and to talk about how to move things forward at a faster pace than has been the case so far. So with that, thank you very much, Afsaneh. Thank you, Creon. Thanks, Zach, for putting this all together. And thanks to everybody for joining us, and we'll see you again soon.
Thank you.
Thank you very much.
Thank you, everyone.
Bye, everybody.